A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to go ahead and cover some of the bigger news items out there. Right now, everybody's talking about war escalation, and it looks like it may be coming sooner rather than later. We're going to dive into that. We're going to talk a little bit about the Canadian CPI numbers that were out earlier today. All of a sudden, the inflation situation in Canada looks like it's improving just a bit, and we've got a whole slate of FX pairs that we're going to look at. Dollar CAD, Kiwi. We're looking at the Euro USD as well. That one's on the move. Great Britain, Pound, Japanese Yen. Still stuck in that range, but an interesting level that could be coming our way with a downside support buy, which is very, very possible here, probably in the next 24 to 36 hours. Also, we've got copper. We've got copper pulling back a little bit today, but trading very near all-time highs. So we've got a lot going on here. We've got the AI boom. We've got some politics happening today in the United States, a big primary day. There's a few Republicans that are sort of up for not necessarily up for re-election, but they're definitely in some serious primary battles. We're going to go ahead and go over that a little bit if we have time. But right now, we're looking at major war escalation. I'm watching Trump closely. It seems like he's saying things about every hour now. We've got a big move out of Pakistan into Saudi Arabia, a big move. And then we've got also Belarus moving a lot of some nuclear weapons from Russia right up on the Belarusian border, and they're also running exercises. So the threat escalation ladder, the war escalation ladder, it's getting hot again. It feels like it's getting hot, and I think that's exactly why we're seeing a little bit of angst in U.S. equities. It's not a big bullish day. It's a little bit of a negative print, but right this minute, what's got me sort of on edge, not necessarily on edge, but I think anticipating a move here in the next 48 hours. The dollar index is rallying again today, and then we've also got U.S. oil, which is right up around 103.80, and UK oil is at 110. Remember, those are derivatives. Those are derivative products. The spot markets are much higher than the derivatives right now. So we're going to cover all that. We're going to get after it. Good to see everybody out there in YouTube land. Mohammed, good to see you, Mohammed. And then also Jason Max and Yo Shane. Yo Jason, how you doing? I'm doing very well right here. If you guys have any questions at all, be sure to ask. Remember, it's an interactive trading experience. If I know the answer, I will answer it to the best of my ability. And if I don't know, I won't waste your time. That's for sure. Kelvin, good to see you. Kelvin, welcome. Over in the How to Trade community, good to see everybody in the trading room. Bobby Bob, always a pleasure. Bobby Tuku, welcome back, Tuku. Let's see. Ralph H, good to see you, Ralph. Like I said, if there's any specific markets you guys want to look at, sort of an open book these days. If you want to look at a specific price action or a specific pattern or a market, if you have a question on maybe a position you're holding, I can throw my charts up. We can look at our indicators and sort of, I guess, draw a conclusion, make an educated guess as to where the market may be heading. Packham, good to see you, Packham. Welcome. All right, let's go ahead and just get on with it. We've got a couple of trade updates that I will start with. We're going to be very brief with these, though, because I did cover them yesterday. U.S. dollar, Canadian dollar is definitely on the front burner right now for me. Watching this area very closely. We're looking at 85 sells, 137.85. We've got a high today right after the CPI figures came in, about 137.74. So a little bit of compression. We're sort of right on the doorstep of our resistance zone. I really wanted to get that trade this morning. I wanted to get it right after Canadian CPI came out. I'm going to unpack that for you as well. But this trade, man, if we could have got it this morning, it was just a banger, high probability. We're still waiting. I really haven't been scared off of it at all. We've got our moving average. Our 13-month EMA is just kicking it right there at 137.95. We've got 138 to the top side. Our Bollinger Midpoint's right at 137.84-ish. So that area between 137, probably 75, and 138, I'm expecting a heck of a fight in there. I'm expecting two-way action in that area to stand tallest topside resistance. I just don't know when we get it. I thought we'd get it earlier today. That's why we talked about it so much yesterday. It did not come. That trade did not develop sort of the way that we thought. Trade idea out earlier today. This one was facing the Kiwi. We've got the headline there was Canadian CPI falls. The Kiwi support is coming up. Two unrelated issues, but definitely interested in this Kiwi trade. I think it's a pretty good one. Thought we had an opportunity maybe to get it a little bit earlier today. Not quite. So right now we're trading right around 58.39ish, 58.40, 62% down there, right around 58 even. I'm looking for a test of 58. I want to see 58.01s. If we get a fill down there, we got a pretty good opportunity to clean up maybe 28 pips. That's what I'm looking for, 28 to 30 pips, somewhere in that zone. And the reason why the profit target is not big is because this is a very tight market. I mean, if you just go from top to bottom on our weekly Fibonacci's, you're looking at going from 59.91 down to 56.81. That's not a huge range. That's not a huge range to work with. You'll notice the distance between our 50% retracement and our 62%, 58 and 58.36. That's tight. That's only about 36 pips. So we're looking to grab most of that, maybe 25 to 28 pips, something like that. But the market has to fall away, and it has to get us involved down here first. And if it doesn't do that, then we're going to have to be sitting on our hands and waiting. And one more quick pair before we move on. This is a big-time level. No question about it. Weekly chart here, Euro USD. I really like this market structure, this swing low. It's not even a swing low. This would be technically your swing low. I call that a spike. And the spike is when we trade beneath the previous candle and the subsequent candle. It's almost like a morning star in that situation, very close. But this issue right here is with the spike, the bottom of my Fibonacci retracement. That's what I'm working with. Nice spike low there, nice spike high. 3 weeks of compression. We broke down through this Euro USD. Remember this 38% sort of broke beneath that last week, and we went right down to 62%, right around 116, and have got a pretty good bounce. We're still trading right around 116.07. If you take this down to a 30-minute chart, you can see exactly sort of what we've been looking at. A nice big sell-off in there. I mean, we talked a lot about morning stars last week. That's a morning star. Nice big sell-off there, big negative candles, little doji, nice big green follow through back up there to 116.02, and we've only seen a high to about 116.10. Watching this closely, still love this level as downside support. If I was a sort of a betting man or a wagering person, I would guess that this we trade up and probably test that quarter handle, maybe somewhere up around 116.25. But we don't have to. We could definitely see the dollar keep gaining ground on the majors, and if that's the case, then this pair will go down in short order. So I'm watching the Euro USD closely. I think that when we start talking about trading, horizontal support and resistance levels, and you have something that sets up that is a morning star, essentially, nice big bearish candles, tight doji, big green candle, and then there's sort of your bid in the run. That's a good chart pattern that coincides with a key level right around 116. That's why I'm always arguing with the ICT traders and all the smart money concept traders. They'd say, oh, no, liquidity sweep and compression and all this stuff. And I'd said, yeah, but what made it all happen? It wasn't necessarily that we were brilliant with our Fibonacci levels, but look what happened. We had a nice range to work with, threw our Fibbies on there, and they lined up perfectly with 116. 116, the level's the reason for the price action. The price action is not the reason for the level. That's just my opinion, and it's been an ongoing argument between me and the ICT crew for seemingly the past 5 years. But just remember, it doesn't matter how you trade. It really doesn't. If you're an ICT, smart money concept fan, go for it. Get in there, get the job done, get after it. You'll do just fine. Watch your risk and reward, learn the concepts, and do the best you can with it. If you're a Fibonacci trader, you're going to be all right. Just employ solid risk management. Viable trades is what I'm looking for. Remember, we sort of always talk about being a good trader. A great trader is somebody that makes all the trades they need to make and a few good ones. That's exactly what I think about when trading comes along. We don't make great trades every single time. What makes a trade a good trade is getting out where you're supposed to, not making your losses huge. Maybe taking a little bit more on some trades where you can, and maybe taking a little bit less on some trades where you should. I sort of equate it to being an NFL quarterback. There's a lot of NFL quarterbacks, the National Football League here in the United States. A lot of quarterbacks make a lot of money every single year just taking what the defense gives them. I mean, it seems to me like more and more that's what we see. Instead of throwing those long bombs and trying to hit touchdowns all day long, you see quarterbacks checking down and taking what's there for them. I see trading as the same way. Same thing. Take what's there. Take what the market's giving you. You don't have to call tops and bottoms. You don't have to be the next Warren Buffett. You don't have to be a guru to make money. All you have to do is understand where you need to be getting in and where you need to be getting out. It's not as hard as it sounds. There's a million different ways to time the market. There's a million different ways to trade, a million different strategies. But what you have to do is pick one, execute it, and stick with it and be dedicated and disciplined. You're going to be fine. You're going to be fine. I know we're sort of talking a lot of psychology this week. It's because I've been inundated with messages over about the past 2 weeks. Shane, I'm getting beat up. Shane, I'm frustrated. I'm struggling. I go, listen, slow down. Let's talk about why you're having some issues. Think through the losses, and then come back to the table ready to go. That's all it is. Let's see. Narek. Narat Kitchuman, man, that is a big name. I struggle with pronouncing much of anything. I can say gold, right? We're going to cover gold here in just a second. But Narek, good to see you. Narek, welcome. Let me see. Kelvin, the Euro USD 15-minute orb. Do you think it's still valid? T. Marina, good to see you. Let's see. Euro USD 15-minute orb. No. I would be very careful trying to play a breakout on a 15-minute Euro USD orb, especially if you're playing that US session. I really view this as being high-risk trading. Now, if you're interested in doing it, go right ahead. You can see that the whole point of trading an orb is when the market starts, when those volumes start to come in. And if you wait, you can see that you got really good participation here. You know, the first two bars of that New York session. So there's bar 1, there's bar 2. That would be your sell. Yeah, I'm not interested. I'm not interested in really holding shorts here. It may be the right thing to do with regards to your orb, but remember that is really, really risky, Kelvin. You're talking about an orb strategy using a Forex pair where the volume, sure, it did pick up a little bit on that U.S. Open, but now we've sort of gone through the London close, which is right around here, and you can see the volumes are really drying up. And typically when that is the case, we run into trouble. So I would be very careful with what you're doing. If you are holding shorts on this orb, on this two-bar orb, I probably would just be sure that you manage your risk. You don't want to be holding this market if it creeps up to the 125 level. Like, I think that's a pretty good chance that's the case. But we just have to wait and see exactly how this pans out. But great question. Remember, the orb strategy, the opening range breakout, it's all about volume. It's all about participation. If you see a market that's flat and there's not much volume in there and things are kind of choppy, probably not the best way to take an orb trade. And remember, after that London close, the Forex pairs, the FX pairs here in the States really start drying up into the afternoon unless we have a big news day or something along those lines. So you're definitely going to want to be aware of when to trade an orb and when not to trade an orb. I would say that, might be good to probably just watch your risk. That's all I can say is watch your risk. If the trade's already executed, that's that. Let me see. Good to see you too, Shane. I know my name is a little hard to pronounce. Oh, no, it's more my fault than anything. I've got to work more on my pronunciation skills. Maybe I'll get that Rosetta Stone or something on Spotify that'll help me start broadening my my ability to pronounce much of anything. I mean, like I said, I could say gold and silver and copper. I really struggle with a lot of other pronunciations. A lot of it's because I'm just sort of a hillbilly out here in Montana. So not the most sophisticated dialogue. I'm not ever going to be accused of being a fancy orator, that's for sure. But that's okay because I'm a trader, and that's what I like to do. If I wanted to be a linguist, then I probably would have went to school for another couple of years and learned how. Let's cover one more pair, then we're going to dive into our daily fundamentals, and then we're going to circle back around and hit some of our precious metals. I think it's important to talk metals today because we could be headed for an interesting cycle. I really could see something like that happening. Great Britain pound, Japanese yen. We had a lot of folks that were really enjoying this pair over the past few days. For me, relatively simple. I'm going to keep the analytics very simple here. You don't even need any indicators for this one. You just don't need anything. What we have is a range. We have a range that developed on the 30th of April. We've traded inside of that range from the 30th of April in this guppy. We've traded inside of it for the entirety of May. It's already the 19th day of May. We're winding down. We're getting ready to go into the summer months already. And what you can see right here is just compression. If you're looking for a bid, maybe a hot bid, I like the bottom of this zone. I really do. I'd be watching that spike low. I'd view it as downside support right around 210.46, maybe 210.50. That's not a bad zone. Maybe even 210.75, something like that. Gives you an opportunity to play rotation. Now remember, when we're playing rotation, essentially what we're doing is we're looking to buy the bottom of an established range and pretty much target the middle of this thing. Stop loss needs to be down here. You've got to give it a little bit of room to work. But remember, when the market breaks against you, you just get out. This is textbook sort of breakout territory. Sooner or later, this market will move. No question about it. But for right this minute, pretty safe bet that we're going to keep rotating and just chopping sideways. So I'm watching this closely down in here. I would love it. An entry point, that's a little bit robust for me. But if you wanted to be very conservative, maybe 210.50, maybe 210.55. If you want to be more aggressive, maybe 210.74. The key is just managing that backside risk and understanding that once this market breaks, whether it's to the bear or to the bull, you just have to get out. Playing a reversion strategy. So that's how you would do it to the long side. As far as the short side is concerned, be just the opposite. You'd be up here, what do they call that, a liquidity sweep? I call it a swing high. It really is up to you. But that would be the sort of the trade. If you want to have an even money trade, something like this, you could certainly do that. If you want, look, that's a 2-to-1 risk versus reward. Maybe you want to just give this a little bit more room to work. As a general rule, I like big round numbers. I don't like putting my stop losses right above or below swing highs or swing lows. I don't like putting them one tick away from a key level, either a big area of natural support. So in this instance, what would be a good location for our stop out? Well, you got right there, you got a high of about 216.60, something like that, right? Yeah, 216.60-ish. Maybe something, right in here, maybe 216. You could even go 217.25, something like that. You give yourself a chance, and then potentially you can make a lot. That's a 1-to-3 trade, just sort of betting. All you're really doing is betting that this market continues to rotate. Remember, your success in anything, any strategy out there is going to depend on your ability to align risk to reward. That's the bottom line. If you can do that, then you'll have an opportunity to succeed, whether you're trading just a basic rotation strategy like this, or whether you're trading a trend strategy, or potentially looking to take a position maybe on something like that Euro USD trade. So a lot going on here, guys. I think that we're in an interesting position to be trading. I'm fascinated by flat markets. I've loved flat markets for a long time. A lot of folks love the trends and they love the big moves. But man, when you get a market that settles into rotation, remember that crude oil trade yesterday went against us, ended up paying us off towards the end of the session. That market profile trade, we may place another one of those here in a few minutes as well. I'll take a look at WTI crude, and we'll get in there and sort of unpack what's going on in energies. Sort of have to cover the news first, though, to be able to do that with any sort of, not necessarily efficacy, but any sort of, not legitimacy, validity. I don't know. I got to work on my vocabulary, guys. That's going to be my homework for the weekend. All right, let's go ahead and take a look at week 21's bangers. What do we have here? Well, we have a news cycle that's slow. It's not, let's be honest with you, it's not going to be hugely volatile. We're not going to have those big blockbuster events like US CPI or NFP. We do have a couple events, though, this week that are interesting, and the Iran war is going to be your Monday headline from here until this thing's over. That's the bottom line. Every Monday, you get a war update. That's just the way that it is, because a lot of these things are happening when the markets are closed. A lot of the big attacks and a lot of the big statements are during the weekend when the markets are closed. So Mondays typically are going to be war Mondays. Tuesday, Canadian CPI. That was sort of the big event today. It's not really listed as a 5-star event, but it is interesting. We're going to take a look at the numbers because they look a little bit better than those numbers in the United States. That's for sure. Wednesday, FOMC minutes. It's the final FOMC minutes of the Jerome Powell era. So we're going to go through the minutes. Guys, they don't mean much. We've got Kevin Warsh coming in. We've got a turnover at the Fed. Really all that we could take away from the FOMC minutes is maybe there's a divide in that boardroom and some folks want to hike rates. So we're going to be watching for verbiage about, the Iran war, and we're going to be watching for clues on maybe how aggressive the FOMC wants to be with regards to interest rates, something like that. So that's going to be the key takeaway from tomorrow. I'll get you primed and ready for that release just ahead of time. We'll go through exactly what to expect and maybe a few of the markets that will be impacted. Thursday's weekly jobless claims in the Philly Fed. Weekly jobless claims are starting to gain a little bit more popularity. And the reason why is because everybody's really wondering about a recession. We're looking at stiff inflation. We know that from the Iran war. The question is that going to bring on an economic reversal or stagnation here in the United States? We don't know. People are starting to watch the weekly jobless claims, though. That's becoming a number. It's becoming a thing. So we're going to cover that. Remember, I'm going to be going early on Thursday. We're going to get in here and we're going to do a live trading workshop with the 920 EMA crossover. I'll show you how to set it up and how to trade it, and then we'll execute some live trades shortly after the U.S. Open. So we're going to be going early. We're going to be going early on Thursday. That's going to be a half hour after the United States Open. So check that out exclusively on the Switch Markets YouTube channel. That's going to be a pretty good one that should be a lot of fun. I love the 920. I recommend that strategy a lot, but there is some nuance to it. There's some tricks that you need to know so you don't get overwhelmed by maybe a choppy session or maybe a flat session. We'll cover it all Thursday. Friday, Michigan Consumer Sentiment Index. This used to be a huge number. The people used to wait around. This was a 5-star event, Consumer Sentiment Index. You could actually pay money to get the release about 30 seconds before the general public would. And a lot of the institutions were doing just that. They would go to, I believe it was their Bloomberg terminal, and they could pay, they paid a lot, but they got the data before the market did. It's not fair. Life's not fair. We talked insider trading earlier this week. They don't do that anymore. And accordingly, the Consumer Sentiment Index has become really a B level number. But sentiment is very important, and it was horrible last time out. We're going to look for a rebound potentially there, and that's on Friday for Friday's news cycle. Very briefly, our psychology is all systems go today. Tuesday, Wednesday, Thursday. That's what I view as prime time trading. It's all systems go. We want to hit our P&L targets. If our strategy says trade it. We're looking to build the account. We want to make money Tuesday, Wednesday, Thursday. Mondays for getting the ball rolling. Fridays for preserving momentum. Tuesday, Wednesday, Thursday, that's 72-hour block. That's when we want to put the pedal to the metal, trade our plan, and make money. That's the bottom line. If you're going to be aggressive, I highly recommend those days as being the focal point of your trading strategy. Now, you can see this is just a long list of figures. I mean, it's a long list of numbers. Couple of things that we're going to just go ahead and check out here. Let me see. Dashizi, good to see you. Dashizi, welcome. T. Marina, I'm finding the 920 on the 4-hour quite impressive. It's a banger of a swing trading strategy, T. No question about it. No question about it. It's something that I didn't know much about until doing the research and building the videos and trading it on our live streams and doing the workshops. The 920 on a 4-hour chart for Forex pairs is pretty much. I get asked a lot, Shane, what strategy should I start with? And I go, well, if you're interested in being a swing trader, that 4-hour 920 is pretty good. You can use that on the Forex pairs. True 24-hour markets are where that's going to excel. Forex pairs, and then something like a gold. It's a banger on gold. We'll look at it here in a minute, but I like that one a lot too. Let me see, Shane, what's going on with the S&P? I'm going to go ahead and cover that one in a minute, Narek. Next one up, we'll cover the S&P, and then we'll take a look at our precious metals and maybe some of that 920 action. But right now, the S&P 500 is flat as a pancake, it looks like. We'll take a look at it. All right, news of the day. Of course, CPI and CPI, all this jazz. The big number I want you to focus on. We're not going to sit around and chinwag the entire day on the Canadian CPI inflation numbers, but take a look at that. Month over month for April came in at 0.4%, about half of what was expected, and down big from the previous month. But this was the real banger right there. Core CPI year over year. Now, this is a median value. This is a median value, which means it's an average. They figure CPI a little bit different, seemingly in every country you look at. So one CPI is not another CPI. You sort of have to take them in isolation and grade them accordingly. During the overnight, we're going to have UK CPI. Be ready for that shortly before the London Open. All right, core CPI 2.1%. That's big. That's down from 2.5%. Remember, central banks around the world, they're pretty much all cool with 2% inflation. So this was a pretty good set of numbers here. Take a look at the building permits in Canada. Now, don't get too carried away with this. When you see a 10.3% gain, when you were only expecting a 2.1% bouncing back from negative 7.8%, the big thing you have to remember about building permits, especially in a region like Canada, is the weather. Definitely in building season now, the weather's starting to warm up. So if I wanted to get a project going, say in June, July, or August, depending on the backlog of permits in my area or how fast I can actually get a building permit, you're probably going to be putting in for them right now. So I think that building permit draw, I wouldn't get too carried away saying, oh, the economic expansion is in the construction industries there. No, that's seasonal. I think that's largely seasonal, but interesting figure just the same. I mean, really, big time number. CPI year over year, you can see right there with the fuel surcharge, 2.8%, came in a little bit beneath what was expected and up a little bit. But this is the one that we were focused on in the news, not the newsletter, but the trade idea that I put out earlier. Median CPI year over year, that's baseline median CPI, average CPI, 2.1%, beneath 2.3 expected and down from 2.3 previous. What's important about this is you're right around the 2.0 objective. Fascinating stuff. The United States pending home sales up 1.4%. Beat expectations a little bit, basically in line. I wouldn't spend too much time talking about pending home sales here. We'll talk about U.S. real estate maybe tomorrow a little bit after we see the 30-year MBA mortgage rates. 3 year roll on this median CPI number. You can see that Canada's made some strides against inflation, at least according to this metric. You can see nice big downtrend there. Inflation starts creeping back up a little bit, and then sort of in the fall of 2025, he's really aggressively cutting into that inflationary narrative. So is inflation as big of a deal north of the border as it is in the United States? I don't know. I think it's debatable, but no question about it. That's a better looking chart than what we see in the States. Now, maybe that's just because the number's different, and that could very well be too. Remember, if you take anything away from these live streams, trade management and risk management is number one. Number two, question everything. Number three, remember this. Liars use numbers and numbers lie. I can pull a statistic for darn near anything under the sun and prove my case. Do we really know what a median CPI trimmed or whatever this metric is? We probably would have to get in and kick the tires to see how this number differs from the United States' number and maybe the UK's number. But one thing is for sure, at least according to this metric, the number is coming down, and that's a good thing. Oh, having a bit of a tech meltdown here with my stream deck. Hang on one second. Seems like at this altitude when the weather, the air gets dry, when the air gets a little bit colder and the air gets dry, loses all the moisture, man, we just have tech issue after tech issue. All right, let's go ahead and take a look at that US 500. What's going on with the US 500? Well, I mean, we can turn our indicators back on, sort of give me a little bit better look at what's going on here. Big picture, what do we think about it? The uptrend is there. There's no reason even to argue that. But you've got a bit of a pullback there, 15th of May, nice pullback. Open this week sort of with a doji and another doji. So we do have a double doji formation on the daily setting up. Typically, that could definitely be a reversal type of a pattern. So if you really are buying into this sell-off and then two dojis, more than likely that's going to be a bullish indicator. The problem that you're going to have here is the war. The war, we're going to cover that in a minute here because it's really the key market driver for pretty much everything from crude oil all the way to corn. But what we're looking at right this minute is compression. Compression right around 7,400, nice big sell-off, sort of back-to-back, really tight days. These types of days, you don't really even have to see them, but they're pretty much losers when you're trading something like the orb, the opening range breakout. If we were going to go 15-minute orb, 2-bar 15-minute orb, that's sort of the popular orb around these parts. You'd see right there's your opening, the bar 1, bar 2. So what happened? You got faked out and you lost. How did that happen? Very simply, it's a whipsaw day. So that would have been your orb. That would have been your opening range right here. Bang, bang. And then what would have happened there? There would have been your short. That's ugly stuff, guys. That's ugly stuff. You don't want to get involved in too many of those if you sort of care about your money. That's for sure. There's your short. Reversal, gone. So this would have definitely been a loser on a 15-minute orb. And the reason why is it's just whipsaw. It's a whipsaw trading day. In my view, the whipsaw action is a complete product of what we're seeing with our Iran war news cycle. There's no question about it. I'm going to show you a few things here in a minute with regards to that news. But when we're looking at something like the S&P 500, see this 2-bar orb, if we were going to use a 30-minute chart, which is one that I really like, I favor it, you're probably going to be okay. There would be your orb right there. Boom. There's your opening bell. There's your second bar. So this right here would have sort of been the trade, right? Then you wouldn't have got anything. You wouldn't have got chopped up down to the bottom. And right now you'd be looking maybe to bid this thing going down the stretch. I think it's still risky. But as far as the S&P 500 goes, we can look at the long-term technicals. Basically what you need to know is this. The uptrend is very real. I mean, of course, we would love to buy a formidable pullback, a big-time pullback. You're probably going to have to wait till early June, or maybe there's a surprise news item comes across the board. But that zone right there is panning out to be beautiful in the next couple of weeks. This is the S&P 500, SPX. You can see right there. I mean, it's clean as day. 13-week EMA, 70.43, 70.56, that area right around 70.50. That's juicy. So we may get a shot to hit that one in June, maybe in the next couple of weeks, but something significant is going to have to happen to see a pullback. So even though it feels like a pullback on the daily, and all of a sudden the sky's falling and the S&P's off, not so fast, my friend. You're just seeing a little bit of compression to open the week. The bullish trend is still alive and kicking. It's fantastic. I would be interested in buying pullbacks. So, perfect world, you see a nice big sell-off here, something robust that gives us a shot in the next week or two, maybe to hit that zone right around 7,000, 7,050, maybe 7,100. Could be a pretty darn good entry for us. Watching that one closely. All right, I promised metals. Here we go with copper. We talked about this one in the market insights that we put out on our Switch Markets YouTube channel. Go ahead and check those out. That analysis comes out before Tuesday's London session each and every week, except next week. I'm going to be out of the office, so we won't get one next week. But typically I outline some of the movers and shakers, talk a little bit about the newsletter, and outline some key levels. Yesterday, did a pretty good job, I think. I mean, there's your daily chart. Spike low, nice big swing low. Spike high. Copper comes right down and basically just nails that 62% level. Your low is 609 and a quarter, just about $1 above that 608.25. And since then, what do you got? About a $4 breakout to the top side. The big thing to remember about copper is these are all-time highs by a long shot. By a long shot. So in some ways, this 62% would have been a rally-based rally type of a buy. Rally, base, rally, come back down, and essentially what are you doing? You're checking out that base area, which is exactly what we did. Big time level of support right there in the copper market. If you do see this get sold off, probably going much lower, and that would be an instance where I'd be looking at 78% down there, somewhere right in here. Which would be a pretty healthy demand zone. We saw an area of really heavy two-way trade until we finally broke above that zone on the 6th of May. Now, I did get the question. I put the market analysis out, and the first question was, Shane, copper's not worth $663 an ounce. No, it's not. This is a cash copper CFD. In this type of trading environment, CFDs can all be priced differently. They decimalized this one just to basically give you a nice good look at a nice pip. I'd say a pip setup. Just made it easier. So when I'm looking at copper, I'm thinking, all right, it's not worth $613 an ounce. Remember, they grade copper by the pound. This is a function of 100. A multiplier of 100 was used, so we're looking at about $6.14 a pound. For copper, all-time highs. Absolutely all-time highs. If you want to take a look at the month, there it is. I mean, this is it. There's nothing else. There's nothing else. So we've got copper. Why do you think copper is exploding? And the answer is AI. Clearly, the use of copper as a conductor in these big data centers. The data center mania here in the United States is going to a completely different level. We're talking about building 3 times as many data centers in the United States as the rest of the world has. Every piece of bare land, especially in the western United States where I live, any piece that has access to electricity, power, and fresh water for cooling purposes, there's people talking about putting AI centers, data centers everywhere. And I'm watching this, and I'm shocked at what's happening. Never saw this one coming in a million years. Just down the road from where I live here in Dillon, Montana, north of Salt Lake City. I used to live down there for a while. They're talking about putting in a data center that's 60 square miles, 40,000 acres. It's the biggest one in the world. Unbelievable, the plans that are there. A lot of opposition. Folks don't really know what these data centers are going to do long term. Oh, man, I don't know what's going to happen there. But believe me, if you're talking about building a data center, it's probably, it's a complex. It's a set of data centers. You know how much copper you're going to need to build something of that size and that magnitude? You're going to need a lot of it. So that's the reason why copper's up. Gold, a little bit different for gold. Gold, you can see we would love 4,075. We got that beautiful pullback back in March right after the war started. We're sort of creeping down there. We're creeping down there again. 4,500 is sort of the pick to click. The area that we've been trading for quite some time has been between 4,500 and 4,750. Watching closely, I would love a bid down here. I would absolutely love a nice big macro bid right from 4,075. That'd be a great trade. We've got a 13-month EMA down there as well. So take away the long-term stuff, though. Everybody, we really do get lost in these markets, and gold has just been a really tough one. When you see a month that's as tight as April was, and that's a tight month. That's a tight month. And now we're starting to sell off a little bit beneath April's low, and we're taking off and really heading south just a little bit. 4,500 is going to be a big deal. Let's look at our weekly chart, and you can see just how big of a mess it is. It's a mess. This right here, big time move. There's your big long-legged doji, rally, compression. We're trading, essentially, we've broken a little bit, but we've been just log jammed between my EMA, my 13-week EMA, and then my Bollinger midpoint on the weekly chart forever, seeming like 3 weeks. These types of trading environments are really difficult especially when it's flat week after week after week. Really tough to get a sense of which direction this market's going to move. Spike low there, spike high, right at 50%. That's a tough market. I'd be looking at 62% to the downside, 43.95, maybe 4,400 as being a potential bid. I like that level as being strong, but what can we really say about it? It's got to get there first. We're at $4,500 an ounce. I'm looking at buying maybe 43.97s, maybe 44s. That's a pretty good level, but for right now, this is about as tough as it gets. It really is about as tough as it gets. Daily chart, you can see just how, we are in just a phone booth. Do we want to sell it? Do we want to buy it? I mean, if you want to scalp, if you're interested in scalping trades and not taking maybe just not getting those real high probabilities, what we always hear is an A+ setup. Is it an A+ setup, really? I hear that on YouTube. I mean, just every single day. Oh, this is an A+ setup. Oh, this is an A+ setup. Oh, is it really? Okay, well, our weekly chart down there at 4,400 is I don't know if it's an A+ setup. I would say it's probably I'd give it a B+, maybe B, somewhere in there. But this area right up in here, we rotated to the top side of that and really just sort of fell. Let's go ahead and see how price actions worked on the 30-minute time frame. And there you have it. So coming right off of that swing low, we've seen some pretty good resistance right up there at about 45.84. And today, I mean, just it's tough. It really is a tough type of a trade. There's sort of your open for your daily. Usually opens about an hour early from the Wall Street open. Typically, that's what happens in the gold market. Nice big sell-off, and then we just sort of rotated sideways. So right now, it is definitely a dead fish. If we were going to trade some gold, and I was doing it right now and playing for money, I'd go ahead and pull my TPO charts up and say, okay, what's shaking here? What's happening? Well, we broke out of the value area that was established during that London session. Right up there's the point of control, today's point of control, right around 45, 46, somewhere in there. And now we've sort of got that B formation. The B formation's a pretty good one. Capital B. If you guys missed this type of a trade, it's not the easiest thing in the world to do, but this would be, in the English language, a capital letter B. So the idea is that we've got a value area here, we've got a value area here, and a void in here. Typically, you would want to take the trade to play it back to the void. Now, I'm not going to recommend this right now because, number one, your volumes are low. You can see we have that massive flow of volume there, and now it's just sort of dried up, and these are June gold futures. I would put a pin in this and just wait on gold. Let's wait till we get a move. Maybe we get a move on FOMC minutes, 4,400, maybe somewhere down in there. As far as placing an intraday trade on gold right now, I'm not interested. All right, this is going to be July WTI crude oil. Okay, what do we have that's the same thing as yesterday? There it is. Same damn trade. Point of control from the overnights right there. The U.S. session point of control, we're trading it right now, 103.75. Can we trade it? Can we take a trade? Well, I mean, we took one yesterday and came out of it all right. Let's go ahead and put 2 lots down and send a market order to the buy side, and we'll sort of break this trade down on the fly. Is this a high probability or low probability trade? It's a challenge. This is going to be a challenge. We have traded this point of control, and it's absolutely been choppy for about the last 2.5 hours, 2 hours. So right now we just took a long. We took a long from about 103.70. Our point of control is going to be this white line, sort of your overnight point of controls down in here. But right there is where the volume is. It's right around 103.72. So what we're looking for is to get a rotation north of this level up into the 80s somewhere, maybe like an 81. I don't have a problem with that at all. That's probably going to be a pretty good location potentially for a profit target. But now it's starting to draw against us. And we're seeing the same problem that we had yesterday. Are we wrong with our assessment? No. Is this an expensive trade to take? Kind of, yeah. And the reason why is the range is big. Even though this is just an absolute chop fest, there's no two ways about it. This is a chop fest for the U.S. session. Right there, 9 a.m. Eastern, opening bell, traditional opening bell on the NYMEX ding ding. What do you have right there? Well, you've got the volume kicks up. What's our high like for the New York session? 104.71. What's the low down here? 102.61. We're talking about a $2 range just in the U.S. session. So if I took my point of control trade, and the market's going against me right now, I'm stuck, about 18 pips, something like that, 18 ticks. I'm not going to know that I'm dead meat until we trade down into this zone down here, maybe the bottom of value, which is another 70, it's about 75 cents, almost $1 from our entry. So can you justify taking these types of trades? These point of control trades, can you justify taking these trades when, okay, we're looking for a swift pop right up here. Maybe we get 81, maybe we don't. Just in and out. Can we justify trading that way given the size of this range? No. The risk management doesn't work. It doesn't work. So right here, demo dollars, remember demo dollars. To make this thing worth my time, I'm going to have to get a run at the high. I'm going to have to put on another run at the high, 104.50, something like that. In order to get that type of rotation, we're going to have a news event, more than likely. Remember, we're trading about 1:38 p.m. Eastern. I'm looking at about another, 22 plus 30, about another 52 minutes of legitimate WTI crude oil trading. Legitimate trading. Do we have a chance to make 104.50? I don't know. I mean, I think that's really grabbing to trade higher by $1, but you can see sort of our predicament. We're in that situation where we're like, what can we really do? We have to take more money because it's more risk. Can you scalp in conditions like this? It's really hard. It's really hard. We'll let that one simmer and sort of, it's already gone against us, 18 ticks? And that didn't take very long. We'll see if we rebound. This trade's panning out exactly like yesterday's trade did. Goes against us, then it breaks up, and then it breaks positive and goes up and gets the money towards the end of the session. This is not easy day trading. This is not easy day trading. Believe me. Been doing this for a while. These market conditions are a challenge just because the damn ranges are so big. They are big. All right, we got some questions. I'm way behind on the live chat. My fault, my promise. I got to do better in that regard. We're going to cover some news after this, and then we're going to go ahead and sign off. Watching WTI open up to the downside now, 103.37. Maybe there's a news announcement or something we don't know about. We're going to have to keep a close eye on that one, see what happens. All right, let's go pack up. A tricky market that forced my hand, 1-minute scalps for the NAS Gold and the Dow 30. This type of situation, choppy markets, that's a situation where maybe trading those 1-minute charts, those real tight charts, might be a good thing. Keeps your risk low. Choppy markets typically render themselves useful towards short-term scalping approaches. Believe it or not, when when you're not fighting a trend, something like our 9 EMA scalping approach, something like this that we've got here on U.S. oil, WTI and Brent, go down to a 1-minute chart. Check it out. You're probably going to get some decent success. Oversold territory, potentially we could get a signal here anytime. You just got to get the crossover back up over the 9. But think about what you're doing when you go to a short time frame in choppy market conditions. You're keeping your risk low and your exposure low. You're keeping your risk low and your exposure low. And in choppy markets, that's the name of the game. They don't have a direction. You can see right now, this is spot gold. That's why the numbers are different. Spot gold, that essentially is what we would pay for a barrel of WTI right now today, 107.45. And then Brent, and these are CFDs on spot, but the Brent crude's trading up at 112.39. So it's a big difference between the futures and the spot. It all has to do with the Iran war, no question about it. Maybe we get a trade opportunity here in the next minute or two. Let me see, 512 Eli. What about the data center they're trying to build under the ballroom? Are they really? Are they really? I mean, I haven't heard that. I heard they were going to build a bomb shelter under there. There's some sort of a fallout shelter under the ballroom. I don't know. The cost overruns with the government are ridiculous, though. That was supposed to be privately funded, and now they want $1 billion to build it. It's hilarious. Some of this stuff just makes you laugh. At the end of the day, it's like, oh, okay. Oh, it's probably a couple $100 million private funds, and then next thing you know, it turns into $1.2 billion with a data center. Why not just and what a nuclear power plant there too? If you were going to build a data center inside Washington D.C. somewhere, where are you going to get the water to cool it off? They say they don't need much water with these closed loop cooling systems. That's nonsense. Think about your phone and how hot that thing gets. Think about that. Multiply that by 1 billion times. See where you're at after a while, keeping that thing cool. Let me see. Pack up. If your gadgets are malfunctioning now, how about the equipment in the proposed data center? It's 100% correct. And I was having this discussion with my wife the other night. She goes, man, they're going to use so many resources, so much water, so much electricity to build these things. And then what are they going to do next year? The tech is moving so fast that you're probably going to need to constantly be revamping these data centers. They're always going to be obsolete. As fast as this tech is moving, well, we need more. And it's always going to be the same. We need more juice, more juice, more juice. I don't know, man. I say cap them or unplug them. That's my opinion. I think mankind is messing around with something. You just don't know anything about it. I know that's short-sighted and a lot of people disagree, but man, you don't rush headlong into technology because it's always changing. Who's to say that a data center you build in the next 10 years that's cutting edge and huge is going to be it would probably be obsolete by the time you get finished with it. Doesn't make much sense. That's for sure. Let me see. They need massive amounts of Coolidge and water. Absolutely, T. Marina. That's 100% right. Eli, it's going to be funded by the taxpayers. Oh, yeah, pretty much. Taxpayers fund everything else. We got a potential trade brewing in these oil markets. Let's go ahead and let this one simmer. See if we get one of our signals to show up. It should. I believe. We just got to get that bullish close up above the 9 EMA. Interesting. Spot trading is a lot different than derivatives. Let me see. Dave's Apple is that strategy and chart set up toward in the course point of control. Dave, I haven't done any courses or any educational materials on the POC, the point of control in market profile trading. I haven't done any of them yet, and the reason why is we got to unpack a lot of concepts there and sort of do it right. But there's been a lot of interest in that, and that's something that I do. Pretty much every day I look at the market profile. So something like a POC, a point of control, it's key. It's really not too hard to grasp. The fun part about market profile and all the patterns, is all the patterns that develop. Like this straight up US session, that's a bell curve. That's a normal distribution. When we get down in here, this is textbook. If you're serious about trading this and taking a high probability trade, you wouldn't be messing around with the garbage that we just took to illustrate this. Right there, your value area low, 102.75s, that's probably your late day bid. Realistically, you'd be bottom. When you see a rotational market, which essentially is what this formation is, it's I don't know if a Gaussian curve is the right word, but it's damn sure a bell curve. That's where the distribution, the majority of the action is taking place in the middle. So these would be what you would call a fat tail risk or a tail risk. So we didn't do much business at all up here, and we didn't do much business at all down here. We've done the majority of this business right in the middle of this bell curve, which is a significant value. There's your value area high, value area low. So that distance is 102.75 right up to 103.96. Significant. It's over $1.25. So you can see by placing this trade, we sort of are taking the trade with the broader pressure, but now we're sort of negative for the session. It's a flat day. So in a flat day, what would you like to do? Sell the value area high, buy the value area low. No question. Starting to get a bit of a comeback. I'm just not surprised. I don't think price is going anywhere. Is it a good trade? It's expensive. You see how much that stuff costs. It's expensive, no question about it. All right, everybody, we do have a few news items that we do need to cover, and I'm going to go ahead and sign off. I've rambled on long enough. This has really been a schizo week for the Iran war. It's been Trump vacillates from minute to minute on, okay, we've got a big, hang on a second, our bells just went off. Let's see. Do we have our buy signal? Yep, there's our buys, so let's go ahead and buy it. We're going to go ahead and send them long. From WTI, we're going to shoot for that area right up in there, and we're going to go ahead and drop our stop loss beneath this swing low, somewhere right down in there, and that's going to give us a chance potentially to get back on the good foot and make a few bucks. Do something like this. Let's execute this Brent trade a little bit different. Let's shoot for something right up in here. Let's play a real tight, and I mean a real tight trade. 1 minute chart. This would be a very tight scalp. I'm going to put that right beneath our signal bar, our 1 minute signal bar, and if that's the case, we can bring this down to a 1-to-1, something like this. That would be the trade, and you can see these are very fickle. These are fickle trades. Now that's a little bit off. I just sort of eyeball these so we can go through them fast, but we want a little bit more out of that. Okay, so the bidders are stepping in. This is our 9 EMA trades, sort of how things are functioning. It looks like that oil is making that comeback we've been talking about for the last few minutes. But you can see I really like the dynamic right here that's setting up in that Brent crude trade. Now this is more of a bigger position. We've definitely assigned more of a loss, but now the market's starting to come our way, and you can see exactly how that scalp worked. Okay, there's our scalp gone. We hit the Brent crude. That's textbook of how you'd want your trade to function. As really a serious long side scalping strategy. That right there is pretty good stuff. And you can get away with it in Brent and WTI because those ranges that are sort of working against us in that market profile trade actually help us on a 1 minute chart scalping because the ranges are bigger. There's more pips involved. We got a chance maybe to make some profits as opposed to sort of being stuck with a bill of goods right now. We're back up to break even. What's the play now on our market profile chart? Do we just let this thing roll? I'm going to go ahead and let it roll, but it's going to be really tough to get back up over that point of control and drive up about another 75 cents, 85 cents to really where we need this trade to go for us to have a chance to be long-term profitable. I'm going to let it simmer, though. We're just going to go ahead and let it set and get back to our news discussion. All right, Iran war. Trump vacillates from hour to hour. It's nothing new. He's been doing it for the last, 90 days? I think we're in this thing now, 80-something days. Trump considers another big hit on Iran amid peace talks, so the big hits are back on the market. When he says he was an hour away from striking Iran and insists the war is winding down, he said that he was going to strike him, and called the bombers back over the weekend. Who knows really what's going on with the foreign policy. I think there are some negotiations, but who are you negotiating with? Supposedly Iranian leadership's dead. We don't know. I don't know anything about it. We're just watching the headlines as they trickle in, and they're coming in all day long. They're coming in. So you can see that the economic price is getting big here in the United States and abroad. Energy really is the problem. It's driving prices north in everything from the pair of shoes on your feet to what you buy at the store to eat. It's just the way that it is. So we're watching this closely, waiting for a break. This stuff right here is news that I saw earlier today, and it is alarming. The next two stories, I'm not going to be a doomsday guy. You guys, if you want to go talk to the edgelords or you want to talk to people that are in the bomb shelters and they're getting ready for whatever's coming, there's a lot of podcasts out there. There's a lot of YouTube videos that are more than likely clickbait most of the time. But I will tell you this. These are some alarming stories, and this all points towards escalation. Pakistan deploys jet squadron, thousands of troops to Saudi Arabia during the Iran war. The Saudis and the Pakistanis have had deals on the books, security deals, for a long time. And this was part of it. At a moment's notice, basically, Saudi Arabia can get on the phone and say, hey, we need some troops. And a lot of them are Saudi troops that are just basically stationed in Pakistan. But this is serious. Deployment includes 8,000 troops, JF-17 jets, drones, and an HQ-9 air defense system. Supposedly, the scuttlebutt was it also involves tactical nuclear weapons. Supposedly, I can't speak to that. I don't have classified information. I have no idea. But the word around the campfire and some of the alt media sources today was that was really a big deal. So we're watching this closely. This is definitely an escalation, though. It looks like Saudi Arabia is loading up after the weekend drone strikes that hit Saudi Arabia and the UAE. So escalation is sort of the order of the day. Belarus launches drills involving Russian nuclear weapons, and this was right up on the border. Russia sort of mobilizing some nuclear systems up towards the Belarusian border. This is all escalation, and these are brand new. That was 23 hours ago. We're starting to see wide-scale mobilization globally with some of the bigger weapon systems that we know of. Is it good? No, it's not good. But is it as bad as a lot of people are saying? Probably not. It's just more along the lines of political posturing and also showing strength. We saw tremendous drone strikes back and forth between Russia and Ukraine over the weekend. Those have been big deals. So it does not surprise me at all that Russia's moving some of its nuclear arsenal up into Belarus. Doesn't surprise me at all. Iran war, though, looks to me like it's going to kick off here relatively soon. Let's take a look at a few of these markets here. Politics. We'll end with politics today, but we are trying to pound just a ton of information into 50 minutes. But what we're looking at here, permanent peace deal. Looks like you're going to get one this year. Strait of Hormuz traffic. This is the global economy. I mean, this is it. Only a 4% chance that it returns to normal. Let's take this out to July 31st. About a 50-50 that you get this thing back online by the midpoint or the latter portions of the summer. I can tell you that if the Strait of Hormuz is still closed by the end of July, you're going to go into a global recession. It's almost a foregone conclusion. So we're watching that closely. Still about a 50-50 shot. June 30th, 30% chance. May 31st, only a 4% chance. So the Strait of Hormuz is Iran's leverage. They've shut it down. It's shut down, and there's no real question about it. Enriched uranium, you can start to see that the odds of that aren't really great. And then also the U.S. invade Iran before 2027. This is probably our other big escalation, and you'll be able to see that we thought this was going to happen last month, and we're way down from that. So maybe we are closer to a peace deal than perhaps we think in the markets. Who knows? All right, as far as politics here today's a big day in the United States. A lot of primaries are out, and let's see the big one. Let's go trending. The big one right here is Massey. This is somebody who Trump's come out against in the House of Representatives. Massey was one of the main catalysts for getting the rest, or at least a large portion of the Epstein files released, and he's an underdog today in the primary. So he may, in fact, lose the primary, and if that's the case, then we're going to be looking maybe at a a change in the balance of power here. So right now, these are your odds for the election that's coming our way in November. Very big deal. We'll talk about this more throughout the summer, but 53% chance Republicans keep the Senate, 81% chance the Democrats take the House. This is pretty much a foregone conclusion, and that's not really a big deal. That typically does happen, but it is going to really hurt the Republicans' chance of getting anything accomplished, and the Trump agenda is going to bog down and be pretty much gridlock for 2027 if this plays out. Now, the other thing that we have to look at here is potentially if the Democrat leadership, if they do potentially take some of these seats over, maybe they gain a net 3 or maybe they gain a net 5, then you start talking about supermajorities after an impeachment that more than likely will come on the first day that new Congress is seated. We'll unpack all of this as we get into the political cycle later this year, but it all is connected, everyone. It's all connected, and it will all impact our markets, no question about it, especially if we see a big-time change in the leadership here in the United States. No question about it. All right, everybody, that's a wrap for me. We sort of went an hour today, but that's okay. We had a lot to cover. Let me see. I got way behind again. Let me see. 512 Eli, Gamer Nexus, if you want more information on the data center. The goal is to send data centers to space since cooling is not required. Well, it makes perfect sense. And I heard Elon Musk talking about this, saying, listen, we should be building the data centers in outer space. Think about what you have there. You're not going to need to cool them. All right, like you said, so you take that cooling out of the equation, and then also you could use solar power as a source of energy to power these things. By building these large scale projects here on Earth, you're looking at really stressing the power grid, which is not equipped. It's not equipped to do any of this. At least not in the United States. The power grid is old, it's segmented, and it's going to be a problem. It's going to be an incredible stressor on the power grid. There's no way around it. So unless you go nuclear and build those power plants, okay, fine, you can do it, but those are a ways off. And the other thing is fresh water. If you start using large amounts of fresh water to cool data centers, fresh water is already at a premium and will continue to be at a premium over the next century. To use those resources to cool data centers when you just don't need to, I mean, I would be really looking to build those things in space. You say, Shane, how's that possible? It's possible. Where there's a will, there's a way. I mean, if you had told me that we'd see Musk shooting as many satellites into space as he's doing and actually landing the spaceships back on the pedestal, it really has evolved. And I think that things like that, being able to construct things like data centers that actually are in orbit is very, very possible. And I don't see why that won't be sort of the technology in the next 10 years. That's why I'm saying you build all these data centers in the next 10 years, they're going to be obsolete by the time they're finished. And I don't know that it does anybody any good, but hey, it's the AI arms race, and the governments and the big business in this world are rushing headlong into it. So as retail traders, we get on the coattails and do the best that we can. That's all we can do. We do the best that we can. All right, everybody, I think we're going to go ahead and take off for today. Tomorrow we're going to cover the FOMC minutes. We'll have a few things for you to look for there. We may cover it actually live. I don't know, though. We'll probably be on about an hour beforehand and just sort of lay everything out for you and give you a few strategies and levels and things you can really look to trade as that report drops. Let me see. Here in Texas, we stay in drought. Well, I mean, the West has been dry this year. Montana's been dry, but the snowpack and it's cooler now. And we've seen the snowpack and the rain pick up in the last several weeks. Typically, May gets pretty hot, but we've only had a couple days that have been warm. So the snowpack, I've seen it snow. I've seen it snow in Montana, to middle of June, even in July sometimes. So I'm not too concerned about the snowpack, but it's been out west. It's been a challenge. If you take a look at the levels in the Colorado River, and then also some of the dams, there's a lot of ways that those water levels are manipulated. But you could say that a drought definitely is prevalent in many states here in the western United States. No question about it. Let me see. That's why they sit on islands in the middle of rivers. Yeah, there you go. Look up the first cities to run out of water. Scary stuff. Absolutely, Eli. You're welcome. You're welcome, Narek. Welcome to the room. Awesome live as usual. Thank you and have a blessed day. You guys have a great day. It's time to get going. Absolutely. Dave, you're welcome. I'm still watching our point of control trade. It's still down a few ticks, but I'll be watching that one towards the end of the day. My guess is it spins higher like yesterday. We'll see, though. Who knows? All right, everybody, have a fantastic trading day. As always, trade the action well, and we'll talk soon. See ya. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, switch markets. Let's do this. When you're ready to trade, Switch Markets is waiting for you.